everyone, it's PSK2329. I just wanted to do a video recapping my bad day in the market on Friday, May the 4th. And today the 4th, the force was definitely not with me. If it was, somebody was playing a Jedi mind trick on me. But it started off with, I actually had BABA calls going into earnings. I actually bought calls down in this area when the market was pulling. I knew BABA had earnings the next day. I knew that based on how bad Amazon smashed earnings, I felt that because BABA is basically the other version of, the foreign version of Amazon, I was like, okay, if they're doing well and BABA is actually outpacing Amazon's rates and records as far as growth, there's no reason they shouldn't beat either. And sure enough, they did smash. But this is why it can be risky playing options into earnings. And I know Mav is a huge believer in this, and I think Beth is too. But look what happened pre-market. So obviously, after the market rebounded yesterday, you had this nice grind up. I was actually up nicely on my calls. A little bit of sell-off into after hours and then pre-market. But then once the call happened around 7:30 and they announced their numbers, you had the huge ramp, which is what I was expecting. What I wasn't expecting is what happened 10 minutes later when you had this huge sell-off. And if you know anything about options, you can't trade options pre-market or after hours. So there was nothing I could do. I was just sitting there watching the price drop and knowing that I had these calls, wishing that the price would stay up here, but that I couldn't exit it. So, lesson learned, I'm not going to be playing options into earnings anymore. If anything, it'll just be stock as it's happening. But where else so I got bit there because I saw, I gave it room. I'm like, okay, I'm going to let this thing open, let the rest of the market play it, see if it'll actually bounce back up and maybe go retest this 191 high. Obviously, it just kind of bounced right out of the gate and then instantly pulled. So, once I saw this failed breakout, I was like, okay, I'm getting out. So I cut it for a loss. Then what I did next was actually, once that happened and I was out of that position, I drew a trend line. I'm like, okay. So I had those 2 points that I drew up, and then I just, I always draw it down as far as I can at the time so I can kind of have a trend that I'm going to ride. So I had this set up, and it actually looked more like this. And I'm like, okay, so now it's in a downtrend. And based on the fact that the market had a nice rebound yesterday, I'm like, okay, maybe we'll go down to retest. Maybe this thing wants to continue to sell off. So at this time, once I sold my calls, I put on some puts, and obviously the stock kind of washed out. Expected a bounce off this big washout, and it bounced fine. Okay, we still held below the trend line here. And then here, when it broke the downtrend, this is actually when I should have exited, but I didn't. I kind of got stubborn in the trade. I felt like, okay, this thing is got more to sell off. It still felt kind of heavy all through here. But then, looking back, hindsight, you can realize this thing actually set in a really nice bottom here at the 179 level. I mean, you can see all these wicks on these candles just telling me that there's buying pressure. Not to mention the fact that they did crush their earnings, and that, there was some interest in the stock again. And the SPY was actually on a nice uptrend as well. So, looking back at those 3 factors, and this is kind of my learning lesson, is that, when it sets in a nice double bottom like this, you have to respect this, especially when it broke the downtrend. I should have got out here, but after already taking the loss and then, not wanting to take another loss and kind of trying to recoup some of my losses, I got stubborn a little bit and held on too long, and ended up, once I saw this parabolic move, I'm like, okay, now it's done. And nope, it didn't go. So I ended up cutting it off into here But again, much too late. I was just compiling my mistakes. So after that, after having a couple of mistakes, I wasn't going to touch it again. I was going to move away because I didn't want my emotions to get the better of me. And that's another good lesson is, you know, if a stock is beating you up, or you have success with it, just move on. Don't keep double dipping. Don't keep going back in and getting your teeth kicked in even more. So I just kind of watched it just to see how it would react. And this is another thing. If you're going to play these blue chip stocks like Amazon, Apple, Tesla, Baba, Google, Apple, things like that, you should also have up a SPY window. So here's my SPY window I have down in the corner. And you can kind of see how the SPY was just on steroids today. I mean, just straight up. And this kind of move, just looking at it, tells me this is some buying mixed with a short squeeze, because I'm guessing based on yesterday's action that people thought the market was going to go lower. And then obviously here, when you set in a nice bottom, the market really bounced. And then people were expecting, based on the fact that pre-market it was selling off, that we were probably heading lower. So this tells me not only did you have some buying, but you also had some shorts caught off guard, because this thing, as you can see, it never really filled any of these gaps. It just went straight up. And actually even the volume was kind of light today up until the afternoon. So looking at the daily, you can see what happens if you go back even just a few days. You can see what happens when you have these giant green candles when we test the 200 SMA. You can see what happens next. You have a little bit of gap up followed by a huge sell-off gap fill retest. So if I had to guess, I'm going to say Monday, maybe we gap up a little bit, have a kind of one of these doji candle days, and then Tuesday could be another big sell-off day. But if you look at the 50 SMA and you look at the 200 SMA, I think we're heading in more of a, and even you could even draw trend lines here, and then here is forming a perfect symmetrical triangle, and we're going to get to a point here where it's going to narrow, and we're either going to have to bust up or bust down. And that's really going to determine the future of the market here. So I think next week is a huge week for the market to determine what's going to happen next. So just a little side note there, in my opinion. So that was my first loss of the day. The other thing I had on my watch list was Weight Watchers, WTW. It actually had great earnings. Obviously, it's Oprah backed. And based on AJ's notes and awesome calls, I actually read the report in pre-market, and I was very, very bullish on the stock. AJ's notes were that this would do a full gap fill, which it did, which great call. It fully filled the gap on some profit taking. And if you look at the daily chart, every reason it should. I mean, it's been bought up and bought up and bought up and even bought into. I mean, you can see from early and even in April, I mean, people were just buying up into this. So there's gonna be some people locking in profits. So one of the other things I've been doing, and this is, I think, something as you get better, as you get more experience and you get better at multitasking, and I know Spartan is huge on this, you can actually set alerts. So I set a ton of alerts, and because it's impossible to watch all the stocks all the time. So I actually set a price alert on this. So I had it set up, and this is how I do it. I just set up like, hey, if a price goes above this level, I want to know. If it wants to go below this level, I want to know. So I had actually set alert that if this thing breaks 76.50, I want to know, because it's going to have a run up. But if it breaks also, I think I had set it here at this level, kind of the pre-market base. I'm like, okay, if this thing breaks 74.50, I want to know. So I had the alert set at 74.50, and then it actually tripped the alert here. So then I pulled it up on one of my other charts, and I was watching it to see, okay, is it going to ramp further or is it going to sell off for the day? So I watched it, And this is another good indicator on how you can tell a stock is going to sell off. If you have a big move like this, double top, you can see the wicks, the long wicks. That's a true indication that you have selling pressure. And you can see more wicks, these long wicks. When you see all these long wicks on the top or you see a long wicks on the bottom, that's telling you that there's pressure on that side. So you had the big move up, pulled down, tried to retest and fail, followed by the big washout candle, the big sellers saying, okay, this thing's not going to break out, time to lock in profits, which is my number one indicator that a short is coming, a good short is set up. So I always, once I have this big washout candle, I wait for the bounce. So I took a short here right off of once after the red candle, I took a short, and I actually sold down here. I was hoping for 71, but as it started to speed up here, and you could see the volume start to speed up. So once I saw this big volume candle, I waited for the push, and I actually covered my position. I didn't know if we would get all the way down. I didn't think the stock would go red on the day. I figured maybe if anything we could come down here to 71 and test this double bottom. But once I saw the volume, and you have this many red candles stacking up, or red bars stacking up in a row, you're going to start to get some green candles. So you need to realize, hey, this thing's not just going to put up red candles all day. So once you see the big volume, you need to cover, because that's telling you you're kind of running into an exhaustion point, and that you're probably going to bounce. So I waited for the push, covered my position. So it was a nice almost 3-point trade. So got a good win there. My other loss for the day was Tesla. I played this completely wrong. Let's just go to a 2-day here. So Tesla had the week open. Again, look, you can see the long wick telling you that there's buying pressure. So ramped up, kind of squeezed, ramped up, and then I actually got, once it broke here and it kind of broke the uptrend, I took a short. I've actually bought some puts, and I let them go and let them go, then kind of took it off my radar. And by the time I had re-looked back at it, we were already over here, and I'm like, okay, if this thing breaks high day, I'm out. Sure enough, it breaks high day, so took a loss there. I should have paid more attention to it, especially when it comes down to fill some of this gap. If it fills half the gap and then reclaims, you can bet that it's going to continue to go higher. So, and then it just continued to rip after that. Actually, a little more of a squeeze. Tesla is heavily shorted stock. I think it had over 30% short interest. So you kind of had to anticipate this, especially when it set in a nice bottom the day before and it wasn't going any lower. So took a loss there. And so I was still down for the day. And then I actually ended with a little win. And I'll show you for, and actually let me, I know I had a few people ask me about entries and exits, and basically this is how I do it. And Spartan taught me a lot of this part, is just draw trend lines, and when it breaks trends, that's your entries and exits. So if you draw trend lines, wait for the open. You don't have to play the open. I mean, Eric, AR Trading, he waits 15, 20, sometimes a half an hour for a stock to open, because at the open, one of two things is going to happen. The stock is either going to pop or it's going to drop. So why try to anticipate? Why try to be, a fortune teller? And until you're at somebody like AJ's level, where you've had 13, 14 years of experience, or Spartan or Mav or South Beach or any of those other people, Beth, you need to just wait for the stock to open and let it show you what it wants to do. And if you read the notes and AJ is saying, okay, well, I think this thing might pop and then gap fill, then go long. Well, if the stock drops and then goes long, you need to just wait till it opens, then play it once it starts to curl and base. But as far as entries and exits goes, I use a lot of my trend lines and my EMAs for my entries and exits. So I wait. So you can see this is on a nice uptrend. Wait till it breaks the uptrend, forms a candle after the trend break. That's my entry. And then I ride it until the trend breaks again. And I literally sit here during the day and draw these trend lines. So once the trend is set and I'm in it, so draw another trend line. Okay, so it broke. This is a good example of where you might want to get out, but you didn't, because it didn't confirm over the trend line. So technically you could have still stayed short until here, or here, until it actually had a candle over the trend line break. Because here it was testing the trend line, but it didn't actually break it, and it just kept going down. So that's an easy way to take a little bit of emotion out of it and give yourself more patience, is wait for those trend line breaks. And then you can even see here, if you draw another trend line, this thing was just on a straight uptrend, and you only need to pick 2 or 3 points for it to touch to really identify a good trend. But if you look at this trend line, I mean, this thing was just a straight vertical monster. And you would have never had to exit this trend until over here, until, almost the end of the day. And look, that's where your red candle started to show up. So yeah, you're not going to catch the top, but you're still going to catch the majority of the move. I mean, you would have entered here down at 286, and you would have exited here at just 294.50. I mean, who doesn't want almost 10 points to the move off of stress-free, easy trade? So if I can give you any advice, is just draw trend lines, follow trend lines, use moving averages, use something to help give you entries and exits based on confirmation, and wait for confirmation. Like if you go back to Baba was a perfect, looking back, the stock was in a nice downtrend, but looking back, based on the open, it set in a perfect bottom. And another thing too is most stocks, once they bounce off a support level and then they try to go retest, 65% of the time they will try to retest. That's why a double bottom is so important, because you're talking about almost 65 to 70% of the time they're going to retest this bottom and then bounce. So if you know the odds are in your favor, once a double bottom is in, a stock's going to bounce, you should, anytime you see a double bottom or a double top, you should play it to go the other way, because the odds are in your favor, it is going to bounce. And if it doesn't, well, then you just cut it off. But majority of the time, if you see a double bottom or double top, now 3 times is where you start to change the numbers a little bit. If a stock bounces and if it tried to retest again, usually on the 3rd time it's going to break through, or even the 4th time. Very rarely do I see a stock test 3 or 4 times and not break through. If you do, that means it's a major, major, major support or resistance level. But that's why I love double bottoms and double tops, because you're going to get a bounce and you can play right off them and play right into them. But my other little win for the day was right at the end of the day with Amazon. You can see Amazon actually set in kind of around the 82.50 level. You could see it set in this kind of this top. Actually, even you could say 82. I had a number drawn around 82.50, but even if you go a little higher, let's just say 1583, had this nice top in, tested it once. Based on what I just told you, it's going to retest again more than likely, especially when it had kind of set in a nice little curl here. Retest, got rejected, retested again. So I was like, okay, 3rd time, this thing's going to retest. If it doesn't break through and break out, then it's coming back down. So once it broke through this line and it broke its uptrend here, if you draw a line right through here, you can see where it breaks its uptrend right here. And then you had this big red washout candle. I'm like, okay, perfect. It broke the uptrend and I got my little washout. That's what I want to see, because this psychologically, this is sellers saying, okay, this thing is not going to go up any higher. I need to lock in and move on, or lock in majority of my profits or all of them or some of it. That's why I love these big red candles to tell me this thing wants to go lower. But you can kind of see by the end of the chart, or by the chart, that it really didn't want to go a ton lower. So I took my short, followed it here. It bounced really quickly here, and I'm like, no, we're coming to the end of the day. It's a Friday. It's probably going to sell off a little more, and it didn't. So I ended up covering here once I did get a little pull. So ended up making a little gain. Could have been a little better. I was expecting more of a sell-off because the market actually had sold off more. I was watching SPY at the time, and you can see how SPY made this nice sell-off. This is what I was expecting. Tesla did it, a few other stocks did it, everything did it but Amazon. And I have a feeling it was kind of a sympathy off of BABA, because BABA didn't do it either. BABA really didn't sell off at the end of the day either. And Apple was making a nice grind even higher for all-time highs. So that was kind of my day in a recap, and how you can use trend lines to help you with entries and exits, how you can wait for the open to kind of get an idea of what a stock's going to do, wait for that confirmation that a top or a bottom is set in. One of the things I talked about in my last video was anticipating, and how it can really, really hurt you. Today I've been on a great run. Today was a bad day. It's okay. I'm not, I was frustrated at the end of the day, sure, but that's the great thing about trading, is tomorrow we got a ton of great opportunities, and I'm looking forward to Monday. I got a couple of days to clear my head, review all my trades, and kind of go back to the basics and get back to it on Monday. So I'll be prepared. And the thing about next week is, I think next week's going to be a critical week in the market, and you need to be prepared for whatever happens, whether we break out or break down. I think it's still, like Beth is saying in chat, I think it's still kind of a dating game where you want to play smaller size and you want to just kind of sell into a support and resistance, and don't marry anything just yet until we figure out if we're going lower and we're going to actually bounce, or if we're going to go higher. And until that's set in, I think we just kind of got to play it by ear. So hope everybody enjoyed their weekend, and hope you enjoyed the video. Thank you.